Hello traders, welcome back to Nova channel. As you can see on the chart, gold price is facing with a very strong selling pressure at the moment. What is happening? And let's find out now. Gold prices are likely to remain under the pressure ahead of the meeting between the US President Donald Trump and Chinese President Xi Jinping in the week ending October 24. The shiny metal tumbled 3.29% to $41.12, posting its first week loss in 10 weeks. And there's a lot of factors that impacted gold price decrease. And the first factor we will talk about is US-China trade truce. The US and China, after two-day talk in Malaysia, have reported reached a preliminary consensus on issues like export control, fentanyl, and shipping levises. US Treasury Secretary Bessent says that the proposed 100% tariff on China is off the table now, and difference over the sale of TikTok could be resolved. Besides that, he was optimistic that China will delay its latest rare earth controls for a year. It is to be noted that rare earths are needed to produce advanced products ranging from semiconductors to defense equipment. China is expected to start buying US soybeans that it has stopped before the harvest season. Trump and Xi are set to finalize the deals, as the former said he expects a good deal with China, adding that additionally the level follow-up meetings may happen in China and the US. And now we will find out the data roundup. A weighted US CPI report in last September released on Friday showed a cooler than expected reading across the board. As headline CPI rose 0.3% month-over-month, core CPI rose 0.2% month-over-month. The headline CPI was up 3% year-over-year, while core CPI rose 3% year-over-year. CPI inflation clearly running well above the Fed's target of 2%. However, data coming in cooler than expected and remaining around the recent ranges as tariff pass-through is low. Still, the Fed rate cut in October. Traders have almost fully priced in a 20-point rate cut in December too. Regarding to the LBMA conference, the London Bullion Market Association's conference started on Sunday in Tokyo, Japan. The conference should be attended by gold traders, brokers, and refiners. John Reedy, as World Gold Council, said that the LBMA conference that the central bank demand is not as strong as this was earlier. He added that his conversation with traders reflected the gold price may have to fall further after a steep rally in the last 3 months. And the next part is very important because it will relating to gold ETFs. Total non-global gold ETF holding fell for a third straight day to 95.19 months at October 24, as ETF holding witnesses the first net weekly outflow after 8 consecutive weeks of net position inflows. Nonetheless, ETF holdings continue to hover around 3 years high, have risen 15.62%. And the upcoming data and events that traders need to pay attention to is the major U.S. data on the tap this week includes the U.S. Conference Board Consumer Confidence occur on October 28, Advanced Goods Trade Balance October 29, and 3Q's Advanced GDP and Core PCE Price Index quarter-over-quarter on October 30, and September PCE Price Index on October 31. The first preferred cause of inflation. Now I will provide you the gold price outlook. Gold is expected to remain under pressure ahead of the Trump-Xi meeting on October 30, as trader deals optimism takes center stage. While there may be further progress on some sectors issues through talks between the US and China, key issues like national security, state-subsidized technical rates, and Trump's agenda of financial imbalance, remain unsolved. In addition, in a contentious development, the U.S. is launching a trade investigation into whether China fully implemented its complement under the Phase 1 agreement and will be deciding on required actions. Gold is likely to be under pressure in the near term as the bears eye the task of support around $38.22. Fed rate cuts expectations will limit the downside. Resistance is noted around $41.60 to $42.00. For a long-term horizon, we look for a target of $5,000 by the end of 2026 and suggest accumulating the momentum in downward correction. And that's it. That is my video for today. Thank you for your watching and see you in the next video.